Hey guys, welcome to this video. In this one, I'm going to cover the UK 100, the FTSE 100 tick. You can see the data in this video has come from Pepperstone, a broker which I've done a review on before and I trade with myself. If you want my free training, it's underneath this video. Just go underneath and it's right there. It will change things for you. So I called the FTSE short, you will know, and I will tag my idea that I posted underneath this video. I called it short up here. Okay, now the reason for that is based on simple price action rules. Okay, you can see that every single peak that we see on the FTSE throughout the last, well, since the summer till now, consists of a high stochastic oscillator / RSI or any kind of indicator you want to use. And you get a peak at the same time. And similarly, when you get the fall or the trough, if you like, you get the opposite. You get a low stock oscillator / RSI or whatever kind of indicator you want. As many of you know, I often say indicators, they do a similar thing most of the time. Anyway, it's just an amalgamation of numbers and a calculation via however many candles you want to count from. Okay, so the thing that's interesting here is there's a couple of things. So I called it short because you fell right in line with previous price action. So what does that really mean? Well, it means if you look where I've just highlighted at the highs each time, you can see clearly people are liquidating their long orders and they're getting short. So that price evidently is preferable by traders as an area to exit longs and change their bias. Okay, so when they exit longs, that is effectively a bias of being short, because if you're selling out your long position, you're saying, I don't think the price is going to go any higher, hence I want to get rid of the asset I'm holding, the contracts I'm holding, and then you flip and you say, okay, well, that is done because the price is likely to fall, in my opinion. So this is all a factual process. When I said to short at this point, I did it because I've seen it 3 times. I shorted every time as well. And I know if I look at the probability and the variance structure of any financial market, this being a global index, I know as long as I trade in line with those natural rules that work over time, then I can be entering a probable scenario. So what's happening now is you're coming to the flip side of that. You're coming right to the bottom, and again, you've got a low price, you've got price action and price rejection, okay? And you're coming to those areas where you've flown away. You've seen it once there. Okay, that went from 7,200 to 7,935, 730 points, whack straight up. Then you came down again, July, all the way up, 7,7 from 725. Okay, 450 points. Then again, 7,200, 773. Okay, then you come back and then you long and you're at 7,700 again. So you have to ask yourself, I've seen it long 3 times. I've seen it short 4 times. I've been right 7 times. Do I want to be a buyer here or do I want to be a seller? Well, of course, I would much prefer to buy. Now, the key here is that I'm not saying this can't go further, okay? And if it does end up going further and lower down, then I'll simply DCA. In other words, I will buy more contracts, because if this is already a good long entry based on the market value at the time, then that must be even better. And that is why I would hold off any further long entries until there. That's reflecting from what you can see on my monthly chart now. That coincides about 7170. So that's my DCA entry. And I say that because if you look at my chart again, you can see that every single push we see from the bottom end of this sideways movement, okay, the more you hit on that, you have to ask yourself, when is it going to break? Because we all know, ultimately it does. Okay, it's a bit like what you saw over here where I'm highlighting. You can see, again, there is a movement out to this point and then up away. So we know ultimately you're always going to break away from a price channel. And it's not our job to be predicting when that's going to happen. It's our job to trade within that range of price, because markets naturally range. So that's why I'm long at this point. That's why I've got a long bias now. And if it comes lower, I will simply buy more contracts. If it gets higher, in line with where I shorted before, nearer 7,700, then I will get short. And it's just because if you look, you can see that you've got this sideways movement. Now, like I said, you would have been right 7 times over the period from the end of May, start of June to now. Okay, 4 months, 4.5 months, 7 trades. So that is why I traded price action, especially on global indexes where historically you have a lot of repetition because of the global economy or the local economy in that economic zone. And I'm similarly long on various other global indexes as well. They're all shaping up in a similar way. So thanks for watching. If that helps, of course, do like, share, comment, and subscribe and get my free training underneath. And of course, as always, trade light, trade safely. Don't say to yourself, you know what, this is a long and I'm just going to sell my house and buy everything I can. That is not how you trade consistently. You've got to be prepared for a potential fall further 7170. Thanks for watching. Hope that helps. See you in the next one.